The hyperventilating dip buyers are out in full force. We said yesterday we anticipated with the jobs report that the market would be mean reverting or choppy, kind of both. What I meant by mean reversion was the market's been going up and then, mean revert back down. And it did go down, but wow, a lot of chop. 1, 2, 3, 4, 5, 6 V reversals. We get this spike in volatility, and then you get this converging volatility pattern. That's difficult to trade, especially if the reversals are V reversals, and there's a lot of them. And so it was difficult to trade. It's minus 12.5K per E-mini today. I'm going to show you where we are on the portfolio calculator. So it brings us back to break even on the month for the latest portfolio and almost a drawdown alert. So today is actually minus 11.3, which would put the drawdown at 12.K per E-mini, and we want minus 15K plus, which we could see that early next week. And so there's a lot of drawdowns at the 15K area. This is a volatile equity curve as well. So volatile markets, volatile equity curve. And it's an up week, though. I'm going to show you that, too, in the portfolio calculator as well, but just extreme. The jobs report came out today, and a lot more jobs than expected. Low unemployment is inflationary, and inflationary means the Fed can be more comfortable with its QT program. So good economic data will allow the Fed to continue to reduce its balance sheet and raise interest rates, which is typically bearish for stocks, but the stock market won't have it. The bond market did. The bond market heeded the Fed's warning this week that they will continue their QT program, and bonds went down in pre-pandemic. I think in pre-pandemic markets, this is what we would have seen. We would have seen this move down in the pre-market. We would have seen this move back up here, another leg lower, past this, and then up again, and then another leg lower for a big down day, more of a mean reversion day. But we have these hyperventilating dip buyers that come in, and I think that's a function of the balance sheet. So the balance sheet was reduced yesterday, I think, by 16 billion. So it's moving in the right direction, but it's only 1%, right at 1% off the all-time highs. And so being 1% off the all-time highs, they haven't really started their QE program. In 4 months, it's down about 90 billion, which is about 22.5 billion per month, much less than what they said they were going to do. Much, much less. And so it's moving in the right direction, but I think a lot of the bonds have to roll off. When that does, the liquidity is gone, and then stock market will be weaker. Earnings will be weaker as well, and so a lot of companies depend on the current monetary policy of QE, and so this transition to QT will reduce earnings. And so even if they are still high in the short term, it's because the balance sheet is still high and the interest rates are not that high yet. So let's go over the trades on the day. So tick fader up 375. Momentum reversal down 1275. You see a lot of trades where the shorts got stopped out up here, the longs got stopped out down there. And then 60-minute breakout got chopped up again, minus 1650 today on this. Initially had a nice short trade on the jobs report and then chopped up. So there's a disallowance for natural distribution in this hyperventilating dip buying market that we see because of the balance sheet. So let's go over the NASDAQ strategies. We were 1 out of 3 on the S&P. NASDAQ really got chopped up. EVP1 had a really nice trade going. Stopped out on the trailing stop loss. One of our few strategies that has a trailing stop loss. We don't use that much. It doesn't usually work, but it does work well on EVP1. 60-minute breakout to the long side. Stopped out, one winner, and then stopped out again. Minus 1375, gap continuation. Got short before it hit the lows of the session. So this was initially a good trade. And, once again, the hyperventilating dip buyers created a V reversal, brought it right back. Stopped out here, covered here. Tick reversal had a nice day. Tick wave got short here. Like I said, in markets pre-pandemic, I think this market would have rolled over, but there's just a disallowance. It reversed right at 1130 as well. It's that old Europe is closed, let's rally now. It's not really a Europe issue. So it's not as if the U.S. has different fundamentals than Europe. Sometimes the U.S. goes down based on something fundamentally happening in Europe that's not happening in the U.S. So when Europe closes, there's a time period where the U.S. would rally, but that's not really the case. But sometimes that pattern is still in the market. Europe's closed, let's rally, it's their fault. Overlap in Q minus 2025, SR counter trend 2V21M plus 475, momentum reversal minus 1225, VTNQ got stopped out right up here at the highs, minus 2335, and then parabolic VSD, stopped out at this point. And just a lot of reversals today, just a difficult trading environment. Let me show you where we are on the week. So here is the portfolio calculator. It came in today minus 1247, and we added another minus 11.3K in losses today, 12.5. And so down about, we're actually up, this portfolio is actually up about 2,000 on the month. And here is, where we are. Lots of drawdowns at the 15K level. Let's draw a line right there so we can see what happens at the 15K level. So very frequent drawdowns, not a very straight line, hard to draw a straight line. So very frequent drawdowns at the 15K level. This one was right at 14K, so I drew the line a little high. The 15K level is below this. We almost got in on that drawdown, and then it ran up to equity peaks, and now it's coming back down here. And so this happens a lot, and very thick, a lot of density here at this level. So looking at, sitting out on Monday until we get a lot of chop early in the week, Monday, Tuesday, and then get in maybe somewhere between 15 and 20K drawdown at this point since we missed the last one. And so where are we on the week with this setup? And so this was the week. Monday, Tuesday were losers. Wednesday was a huge winner, almost a full drawdown worth of winning. If the worst case drawdown is around 30K and you have 28.8, you've almost made up for a worst case drawdown. So coming in today up 13.6 on the week, up 13.6 on the month, down today about 11.3, so up about 2,300 on the week, up 2,300 on the month, and sitting at about a 12.5K drawdown. I have to look at the final numbers in the portfolio calculator, but this is where we are on Friday, and so starting another month, anxious to get back in, and so we benefit from drawdowns. We benefit from volatility. I like volatility, and I'm not a bear on the stock market, and so I'm just going with the trend. If the Fed's tightening, if there's QE, the market goes up. If there's QT, market should go down. Market should go down. Shouldn't divide. It's fighting the Fed with lots of the Fed's liquidity, in my opinion. So we seek the truth, and the truth is, in my opinion, lower. But we trade it both ways, and we are flat at the end of the day as we go into this weekend. So have a good weekend. Look forward to Monday's trade. Those are the trades for August the 5th, 2022.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks. We share our losing streaks, as well as market updates, strategies, and coding tips.